Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Well, thanks for tuning in and coming back to us, listen to our show today on Real Estate Radio Power Investing, where we empower you with the education to maximize your investing success. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. You can go to TomWilsonProperties.com and sign up for a weekly newsletter that brings you economic news as it relates to real estate from around the country and around the world. And you, by signing up, you also can get access to syndications of commercial products that normally are only available to large investors and institutional investors. So by signing up, you can see products that we're only allowed to offer to our clients that are signed up and connected with us. And for $50,000 a share, you too can be invested in multi-million-dollar projects like office and assisted care and neighborhood service retail and industrial multi- and single-tenant products and so forth, and multifam as well. And if you'd like to know more information about any of those topics, please let us know. And if you have questions about today's show or any other and anything else that you'd like to know on real estate investing, please let us know. We always look forward to your suggestions on topics and other guests that you would like us to have us on. Today I have a special guest who's also a good friend. His name is Greg Bond. Greg, like many of us in our listening audience, went from being a techie to a real estate investor through a little maybe a meandering path, and that's a fairly common thing we hear in this business. So Greg has had a career and had a family business that was going that he'll tell us about. And these days he's a turnkey provider of homes. He's also in the assisted living development business, and we are going to talk a little bit about how you find a good syndicator, how you find a good metro turnkey provider, so forth to invest in. So, Greg, so nice to have you on the program.
Tom, thank you very much for having me.
Nice to have you. We've been knowing each other for a number of years. We've been together at some conferences like Summit at Sea, and spent when we get together, we're usually spending 8 or 9 days together with a group of others that are really thirsty to learn and to develop relationships. And it's amazing, isn't it, when you shift careers or get into something new? It amazes me how quickly you can build up a new network.
Very quick. Those are some very enjoyable times, some very great memories that we've had, Tom.
Thank you. Me too, Greg. So like myself, you got an engineering degree, and what did you think you were going to do with that degree, Greg?
Well, I got an engineering degree, Tom, because I had to have a technical degree for the ROTC. I was going through the ROTC Air Force, and so it basically a technical degree because I wanted to fly. So my big dream was to fly. And the term before I was to be commissioned, I was in a motorcycle accident, ended up breaking my neck, and that kind of changed the course of my life. And the Air Force said, "Bye-bye, you're damaged goods. You can't fly for us anymore. We'll give you a nice missile silo slot or a nice desk job if you're interested." And I opted out at that point. And my father had started a map company. It was a paper-based map company, and we were publishing maps. That was in the mid-'70s.
Now, had he already started it? Did you start it with him, or did he already have it going?
Well, he started out with 10 map vending machines, Tom, and so I ended up buying one of those map vending machines. I had made money as a teenager, mowing lawns and doing odd jobs, and they had enough money to buy one, so I had bought one of those map vending machines. The business took off, and we were in Lansing, Michigan at the time, and there was no readily available map of Lansing, so we hired a cartographer and had a map of Lansing made and published that map and took the profits and did Ann Arbor and Grand Rapids and all the cities around Michigan. And I figured it was my dad's little hobby, but it wasn't really going to make much, be much of anything. As I graduated and had my accident, he said, "Why don't you join me?" And we ended up buying a small company in Florida, and that's what brought me to Florida.
Okay.
So we acquired a company down here.
So in the 70s, there were still areas that weren't mapped in enough detail to have a published map for. Is that what I'm hearing?
Yeah, surprisingly so.
Wow, amazing!
It was. We went through the iterations of scribing these huge maps and doing it all by hand to transitioning to computer, and then as we transitioned to computer to the GIS systems, and then eventually being not realizing how fast Google Maps was going to take over, and it caught most of the map industry by surprise. So it pretty much 2008 it pretty much just tanked. We had 250 employees, about 28 million in sales, and
my goodness,
a pretty nice business running.
My goodness, yeah. It's speaking of technology changing. When I started off at Fairchild, I was, we were still physically cutting what they called ruby liths. So you were laying out on a piece of mylar that had red on it, and you'd cut out sections that you wanted to have the photolithography take care of on your semiconductor, and that's how they were doing it at the time. There were no computers doing it.
Tom, that's exactly the process we used.
Okay, all right. We learned something new about each other. Or something.
Exactly.
There was a little technical thing of the old era that we were doing together. So what got you into real estate?
Well, I attended the church that I was going to, had a class called Crown Ministries. And so it was pretty much the forerunner of Dave Ramsey. And I attended that class, and I specifically remember the instructor saying, "Your house is your biggest investment." And even though I know that today not to be true, back then I thought, well, my goodness, if your house is your biggest investment, why isn't 2 or 3 or 5 or 10 houses even better? So I just kind of had that in the back of my head. And my wife and I, after I got married, we decided that we were going to live on my income and bank her income, because when we had our family, we wanted to make sure that we weren't locked into living on 2 incomes, and we wanted her to be able to stay home with the kids. So we lived on my income and had a nice pool for investing. And I've never really been comfortable with the stock market, so I wanted to invest in real estate. So we started buying a house or 2 a year, and we built ourselves up to about 24 homes. And I figured that'd be a nice nest egg for our retirement. We rent them out for 30 years, and about the time we were in our early 30s at that point, and I figured in 30 years they'd be paid off, and it'd throw off some great retirement income. So that's really what got us started.
Wonderful. And that whole concept, my wife and I did the same thing. We're coming up on our 50th anniversary here pretty soon, and way back then, she was a nurse, I was engineer, and we thought, well, let's make it so we'll just live on one income and we'll bank the other, and that's a wonderful plan. Unfortunately, a lot of parts of the country that are more expensive today, it takes really 2 incomes to at least have the standard of living in the area that you want to be in. So it's really kind of a hard model to still have these days, but if you can pull that off or do a portion of that, that's a good approach. Pay yourself first thing, right? Exactly. So then what took you from having a nest egg of product to saying, well, this is going well, and I think I'll just keep on going and do some other things?
Well, the map industry began to take off, and we ended up developing, that business. I joined my father when it was about $400,000, and so we grew it to about $28 million. And about 2008, like I said, the bottom just fell out of it, and we came to the realization that there was going to be no more mat business, at least at the extent that we had been running it. So we ended up selling out to a billionaire in Pennsylvania whose passion was maps. And I guess Tom, when you're a billionaire, you can have hobby.
You can have a hobby.
That don't have to make a whole lot of money. So
what I'm trying to get to is you told us about getting up to like 24 houses in a nest egg.
Yes.
And what moved you to the next step? Because I know you've bought and sold lots of homes, and now you're a turnkey provider and so forth. What got you from the 24 home or so nest egg up to the next level, rather than just sitting back and saying, okay, we got this all in place? Why'd you keep going? Thought, well, it's a great thing. Let's just keep doing it.
Well, I was looking for something to do once the map industry ended, or I had, still 24 hours in the day. So what do I do? My wife at that point she's an attorney, and she had been involved in the foreclosure industry for quite a number of years. So her business and practice was just booming. And I was looking for something to do, Tom. So I started buying more houses, and quickly learned that I couldn't get a mortgage. We had 24 mortgages in our name, and every mortgage company that I approached looked at me like I was like I had a third eye, and they wouldn't even consider me for another mortgage. So I
not only third eye, but look at you like you're a criminal or something, or you. It's like
exactly. Exactly. So I began buying all cash, and quickly ran out of cash, and turned to some of my friends who had money to invest, and showed them what I was doing, and they invested and bought houses from me. And they said, well, how are we going to manage these things? I said, well, I can manage them for you too. So I started managing for them and taking that money and buying the next one and buying the next one and buying the next one. And before you know it, I had a property management business and a turnkey operation. So I would buy the houses, I would rehab the houses, I developed an expertise in that process, and then I would rent the houses out and manage it for the investors. So I was doing that basically just for friends and family, and I think that's probably just about where I was at, Tom, when I first met you. Was just starting to grow that a bit, and met the real estate guys, and they kind of propelled me to the next level, and started promoting me a bit, and here we are today.
And we'll talk about some of those next steps after that. We have Greg Bond with us today, and we're talking about his career of investing in real estate and lessons learned from a seasoned investor. And we'll be back with Greg in a moment and learn a little bit more about how he selects the type of homes and the kinds of products that he's working with today, including syndications. So stay with us. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We have with us Greg Bond today in Orlando, Florida metro area, who turned from techie to the map business to real estate investing. And today, Greg, you still running your property management business?
Still running the property management business, Tom. It's booming, especially in the Orlando market right now, where we've got just such tremendous growth. It's a lot different than it was back in 2004, 5, and 6. Back then, I was wondering whether I should stay in the business or not, and now it's just it's going crazy. So
how many doors?
We can't produce.
How many doors are you managing?
I'm managing about 225 doors right now.
Okay, all right. What's happening to rents in the Orlando area? Let's talk a little bit about the metro.
Yeah, rents are climbing, Tom. It's just like property prices. Rents are climbing up with over 6,000 people a month moving into the greater Orlando area, and job creation at an all-time high. It's really creating the upward pressures on rents, and the builders just can't keep up with new home development. So it's the existing stuff is really desirable So we're seeing some
do you know
tremendous increases.
Do you know what the percent rent growth is in the last year? Roughly?
I don't know the percent rent. I do know that, like I said, 6,000 a month. I know we've properties have appreciated at 11% over the past 12 months, and our rents, are about at that level.
Okay,
as just I'd say shy of that.
What are some tips that you can give the new investor from what you've learned from all the houses you've bought and sold and still hold? What are some tips for somebody that let's say about let's take flipping first of all. What would you tell someone who wants to get in the flipping business?
Well, I think they need to have a process downtown. That's a process and team, I guess, would be my two biggest things. You make your money when you buy it, and you got to know what you're buying and what repairs you got to do. And that's what I've seen. Quite a few properties that I bought in this past year were halfway done. And I don't know the backstory with a lot of those properties. I assume it was an inexperienced investor coming in after watching HGTV and thinking it was an easy flip, and maybe overpaying for the property and underestimating the repair costs and the labor cost, and then get themselves in too deep and not being able to finish the job up and running out of cash. So
we see that all the time. Indeed.
So I think
I think most people underestimate the number of different, not only the amount, but the number of items that they kind of put into miscellaneous, but all added up, they're more than miscellaneous, all the different costs, right? It's a long list of stuff that people don't think about. It's
They add up real quick.
Yep. And then whenever you're dealing with an existing product that's been around a while, you always get surprises. And yet, of course, if you estimate too high, then you'll never do a deal. So it's a delicate balance. And I, like you said,
Sure.
Team, you really, if somebody's going to start it, they really should have somebody that they work with who's already experienced, right? Put in some sweat equity or some or the money or something, whatever you can provide. And hook up with somebody that's been down that path a few times.
Yeah, I'd highly recommend that they find somebody like that, and even if they have to work for nothing, just for the first job, just to see the process and understand what's going on, so they don't make those major mistakes, because those big mistakes can be a killer to their business. So that's certainly a great advice.
I also see folks that. Just like the memory, amazing how short our memories are. We had the big bubble build up there in the early part of last decade, and people just thought it would keep on going forever. So then they were buying houses, assuming that by the time they sold it, the market would be higher, and that's where their margin was, and it worked until it didn't.
Right.
So.
Yeah. I've always been a cash flow buyer. I've never bought an appreciation, don't ever intend to. And that's the other thing I'd say. Only buy on cash flow. Do not buy on appreciation. If the cash works, then appreciation will come, and that's just the gravy.
Yep. If the appreciation follows, that's fine. But boy, it works the other way too, isn't it? If you have cash flow happening, then you don't have to lose sleep at night worrying about if that price comes down a little bit. Right.
Yeah. And in the downturn, Tom, I didn't lose anything because I was a cash flow buyer, and my properties were full. I think I lost 5 or 6 tenants at that point that they couldn't pay, but by and large, everybody's got to live someplace, so they kept paying their rent.
Good advice. Got Greg Vine with us today in Florida, telling us about his experiences with building up a real estate business, both property management and flipping and long-term holds. We'll be back and learn more from Greg in just a moment.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Greg Vine with us today, a experienced investor in Florida. Talking about his experiences and what he's learned and advice. We talked a little bit about what to do if you're considering going in the flip business. How about long-term holds? investing in cash flow products. What's your advice and thoughts about that, Greg?
Tom, I think my biggest mistake in managing my self-managing my 24 properties was that I had no clue what I was doing starting out. If I would have, and I made a lot of expensive mistakes. I think if I would have hired a professional property manager, I think I would have been a lot further ahead from a monetary standpoint. It provided a lot of valuable lessons, but those lessons certainly came at a price.
Mm-hmm. It's really hard. And I did the same thing, although we quit kind of sooner just because I maybe didn't have we didn't have the resourcefulness or willingness to keep managing more properties. So when I started buying houses in the 70s in what was become Silicon Valley, we just kind of got tired of managing, and it just didn't occur to me that investing is a different business than managing, right? And you don't have to do it do both of them together. In fact, by trying to manage, it takes away from your opportunity cost of focusing on investing, doesn't it?
No, absolutely. You get so mulled down in the details of managing that you can't quite look at what you really need to be doing, where your money's coming from. Also, Tom, standardizing everything. That's something that I learned over the course of time. But just if I would have had somebody that had experience to help tell me to standardize things. I mean, I've standardized every part of every house. So the same paint, the same tile, the same grout, the same light fixtures, the same plumbing fixtures. I've standardized as much as I possibly can, just because all that drops to the bottom line. That helps with the repair process. So many economies of scale to standardizing. So.
Yep, you were wise enough to move to real estate investing full time and less length of time than I did. But one of the things that I got out of being 30 years in high tech and managing manufacturing lines and profit centers and so forth is that in a manufacturing line, boy, standardization is really critical. You got to do everything the right way and the same way every time over and over again. So at least I was able to kind of transport that concept and methodology over to houses and standardize it. Yeah, that can be very, very valuable. Not only up front and economies of scale and buying things and instructing people how to do it, but then later on when you come back to do repairs or repaint right, or wall or touch up or whatever you do, it's having the same parts and same method is a big help.
Yep. I used to let the investors or the tenants pick out paint. Just like you're saying, when it came back, it was, where'd that paint go? And now it's all dried up and trying to match it, and it needs to be touched up, and you can't get it right. And so we've gone to that standard paint. It saved us a bundle of money.
Well, it's certainly, it's certainly in the desire to have customer service and the customer is right and they're number one. There's sometimes you got to draw the line there at some point, don't you?
Certainly.
Yeah, what's in the best interest of everyone. So Greg's talking about his property management experience and how just like another associate that we're proud to know, and that's Kenny McElroy. He went into the large-scale multifam business from the property management perspective. So no matter where you start, there's skill sets that you can carry over into the new part of the business that you're in. We got Greg Bond with us today in Florida, talking to us about his experience in a different part of the country, and the basic skill sets that you need to be successful are the same no matter where you are. Stay with us. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Talking to Greg Bond today, a many-year friend of ours. He's also a turnkey provider and syndicator. He operates in the greater Orlando area, and he's teaching us about what he's learned over the years of investing. So, Greg, you've done house flips, providing products to others. You have a lot of houses yourself. And recently I know we've talked about, and we're both doing something similar, and that is moving into larger product. And we've really, for several years now, we've really liked the concept of assisted living. We've talked about doing it in the houses. I think that's still viable for some folks, but we're both in parallel looking at a assisted living at a larger size. Tell us what you like about this kind of product and how it's kind of evolved your approach of going about it.
Well, Tom, I got involved with Gene Garino doing the home healthcare assisted living. So it's kind of the 10 to 14 level per home, and really that was creating a job for me. And I wasn't really looking for another job. I've got enough to do. So we started sourcing some bigger sites and ran across a property that would allow us to do about a 200-bed facility and hire an operator to do that. And that's, the numbers work to hire an operator at that level. And especially in Florida, Tom, the last survey I heard, 21.6% of retirees throughout the country say they'd like to move to the state of Florida for retirement. So I think we've got a huge opportunity, and the demographics of the baby boomers are bearing that out as well. So I think we're sitting in a pretty good time for the assisted living side of things.
Now, I'm trying to recall, Greg, did you wind up doing a house, assisted living house?
No, I had a bit of a problem with that, Tom. I did buy an 8,000 square foot home. It was perfect for assisted living, but I couldn't get a zoning variance. So I got all excited, bought the property, got ahead of myself, and didn't do my due diligence enough to get a zoning variance before I purchased that property. So that was certainly a mistake on my part. But I think it was a mistake that's will pay dividends for me that I didn't get into that side of things.
Yeah, although you probably could have sold it if it had worked out. Interestingly, one of the things that I've liked about my past focus in Texas is less regulation, being more business friendly. But I started looking at accumulating some houses that for assisted living, just like you were looking at, and we've talked about before. And to my surprise, even in relatively unregulated or less regulated state of Texas, I found a couple houses that had under contract, started doing a due diligence, and found out that the local cities or communities didn't want to let you put more folks in. And I think I believe that most places in the country, the state laws allow 6, but as you and I have penciled it out, 6 generally isn't going to be a profitable business. You got to get more like 10 or 12 or 14 in there. And in that case, you run up against local city codes and CC&Rs and that sort of thing, right?
Right, exactly, Tom. Exactly. Yeah, the 6, basically, you're creating a job for yourself, and the 10 to 14, you're creating a little business for yourself. So I wanted to be more of an investor and not have to worry about a lot of the day-to-day details of the business itself. So.
Yep, and I'm now finding that at the larger scale, we've got a lot of communities and cities, even in a high-regulated California, will put these things on fast track because they recognize the need for, and they got mandates for both low income and for assisted living.
Yes,
to
we
provide.
We got a similar situation going on here.
And how do you approach? Now, at some point, you would just think that, just like in houses in the bubble buildup before 2008, that at some point you get the potential of being overbuilt. We got some metros in the country now that have Class A multifam that's now is peaked and is overbuilt. So how do you, what gives you confidence that in your project that you've got going now that you're in an area that's under supply?
Well, it's just the market study we've done and the competitors in the area. It appears to be underserved. We're getting our facility is getting real close to the Villages, which is the number one retirement community in the nation. villages over in.
Right, I've been there.
Basically, it's spread to a 4-county area now, so quite a broad reach. But
how many residents are there? Do you know what the population of residents is in that?
I know it's the number one as far as population increase. It's the number one area in Florida. I don't know the exact population over there, but I know it's large and expanding rapidly.
Yeah, some folks may not know that you can farm out market studies for things like, okay, what's the demand for assisted care in the next 5 years in this area, and what's the supply? How many are there now? That sort of thing, right?
Oh, yeah. That we relied heavily upon that in making our decision in where to buy and just how many beds we were going to put in. We're doing, I don't know what your facility is, Tom. We're going to do some independent living, or some assisted living, and then also some memory care. So there'll be three distinct.
That's what we're doing too. We're looking at 150 units, and 30 of that's is memory care. What's your projected cost per bed? Price per bed for that?
Price per bed
for the resident to pay rent.
Oh, I'm sorry, $3,000.
$3,000. Okay.
$3,000 a month per.
Okay.
Yeah,
and what's it cost to build per foot roughly for that kind of product?
We're looking, it's probably going to be someplace in the $175 a square foot. We're doing a four-story facility, so we're
very nice. Very nice. But so very interesting. Assisted living, that might be an area to invest for our listeners to consider. So Greg will be back with us in a moment for some wrap-up thoughts and comments. Stay with us here on Real Estate Radio Power Investing, KDOW 1220 AM, the Wall Street Business Network. I'm Tom K. Wilson. Stay with us. We'll be back with Greg Bond in just a moment.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So nice having Greg Bond with us today, and I wanted to have him on because he's got such a variety of experience base. We're going to have him on again. Got experience in buy and holds, teaching us about how cash flow is so much more important than speculating on appreciation, what you learned from property management, even though he felt maybe he should have quit that sooner, or at least the things you learned from it allows you to really ask great questions of other potential team members. So, and now looking at assisted living development, which, we as Wilson Investment Properties are also working on as well. Greg, tell us what you think about where the economy's headed, and are you nervous about continuing to invest in real estate during in the upcoming recession, or does that kind of make it even stronger for you and are more committed to it?
Tom, it makes me more stronger and more committed to real estate. Again, if you're investing in cash flow, I don't think you can go wrong. And I think another downturn will just create more opportunities. So if it comes, great. If it's not, I've learned to make great decisions during the times when the economy's great, and I've made great decisions when the economy's bad. So whether it's good or bad, we'll continue to do well and prosper either way. So I'm not overly concerned either way, whether the economy continues to boom or whether it goes bust. I just don't think that people are expecting the bust to be the exact same as it was last time, and I don't know when it's going to bust or when the downturn's going to happen. They always come, but it's never the same way. So I just think it's going to come, but not sure how it's going to come or when it's going to come.
You and I follow some of the same economists that we stay connected to, and as Dr. Doug Duncan says, all expansions end. So at some point we'll certainly have another recession, but I think that's really great advice. If you're making sure you got strong cash flow, then you don't lose sleep at night. It's just less likely that you're going to be in trouble, because even if the value of the property goes down, it's still going to cash flow. And as far as this assisted living arena goes, we got these boomer demographics that's not going to change. That's fixed, and it's going to be increasing demand. And as long as you're in an area that doesn't overbuild, you're probably going to be okay.
Yeah, I definitely agree with that, Tom.
What if someone wants to ask you more questions or learn about your business there, Greg? What can you send them to? We got an email or website to send them to? Yeah,
we got it's GreaterOrlandoHomebuyers.com is our website. You can call the office. I've got Jenny Atkins is the investor relations, and her number is 407-951-6932.
Wonderful.
And she can...
Great. Well, thank you, Greg, and thanks again for being on the program. I think we'll have to have you back and learn some more about what you've learned to share with investors. So remember to also to go to TomWilsonProperties.com, sign up for our weekly newsletter, and there also gives you an opportunity to have access to syndications as we make them available. So it's been a pleasure having Greg on today. We learned a lot from that. And thanks for being on Real Estate Radio Power Investing on KDOW 1220 AM, the Wall Street Business Network. And remember, the only thing that matters is what you do next.